I want to now get some reaction to what's taken place in regards to Jim Chalmers talking about significant challenges for the economy ahead and China downgrading its outlook in the wake of its harsh COVID lockdown. So joining me, Junbei Liu from Tribeca Investment Partners. Junbei, always good to have you on the program.
Thank you for having me.
Could I just start with that big takeover today of Appen? So it's in data services. It's one of our darling tech companies. So $1.2 billion, what's happened here?
Look, the company's gone through a few challenges over the last few years. It's mainly because COVID has created some disruptions, and also two of its largest customer, being Facebook and Google, which account for 80% of its revenue, has gone through some cost pressures, and the share price of those companies has fallen. And there's prospect of potentially maybe they will bring some things in-house. But look, this is much long-dated sort of thing. So it's really just a business being interrupted by the COVID. Now, it's once the market darling, share price has fallen quite significantly. And today, of course, we saw the bid come from the Canadian maker. And the Canadian business is very keen to take them on board. What's interesting, though, the Canadian bidder actually previously bought the second largest player. Appen's the largest, and then the second largest player they actually bought a few years ago. So it does raise some questions about whether there's any competition issues or anything else, but certainly the bidder seems very keen for that space.
But hang on, but late this afternoon, Appen shares are suddenly suspended from the ASX. So, what's happened there? Because something clearly is in play. Is it another bidder potentially?
Look, I'll tell you what, it seems, I don't think so from the surface of it, because so together with the announcement of that they received the bid, Appen released some trading update, which seems to be a lot weaker than what people expected. Not only the revenue is going to be below than last year when things were pretty weak and now it's recovering. Their earnings is going to be significantly lower. They said they didn't put a number.
Well, we can see the share price here on the screen at the moment. It's a big share price fall.
That's
from
right.
Up around $40 a share back down to the best part of $5 or $6
That's right.
at the moment.
So we'd be expecting that downgrade. However, the downgrade was far significantly than expected. So there's speculation whether there's something with the bids, because based on the announcement, it sounds like to something that they need to announce to do with that particular bids rather than new. Maybe they increase the price. It's very unlikely. So there's more to it. So there's more interesting things coming out. The shares might be halted for the next few days.
Okay, so take me to the broader market now, because we've had obviously Li Keqiang in China warning about an economic slowdown in China. You've got the UK warning about recession. You've got the US warning about the prospect of recession. You've got Jim Chalmers here, the new Treasurer, warning about tougher headwinds ahead for the Australian economy. How does this play out into the Australian stock market?
Of course. So look, the economic reality is going to be a lot tougher, because last couple of years we had a lot of cheap money, a lot of stimulus, a low interest rate environment. Things are pretty good. Now, looking forward, for the likes of the US market, things are going to be really tough. And because the inflation is running rampant, they have to increase the interest rate to curb that inflation. Our economy hasn't gone anywhere near it. Our wage growth is nowhere near the wage growth they've seen over there. And our interest rate is not going to get the level they're going to get to. So we're a little bit behind. And then in terms of growth, we're doing pretty well, because we've got miners, we've got banks, and these companies are going to support our share market. Now, coming back to China, it's interesting they say this is worse than pandemic. They grew their economy during the pandemic. Everybody else at GDP fell. They grew. So remember that.
Yeah,
so
that's right.
They stimulated the economy and they grew significantly.
And also, of course, the word from Li Keqiang was to all of the regions in China, stimulate your economy.
Exactly.
Do everything you can right now to stimulate your economy.
You would take it positively, because this is what they're trying to do. They themselves put a lot of cities into hard lockdown, really hard lockdown of zero COVID policy. They probably are likely to reverse anytime soon, but self-inflicted. They are not growing. Clearly, it's going to be really tough. But they have already started all the language, like you said, to stimulate economy, stimulate the household, give the money back to the consumer, to the SME, and they started doing that. So that is actually reads very positively in terms of Australia commodities.
So I've got about 10, 15 seconds to go. One final one. The real testing time is going to be in August here in Australia when the companies release their profit results. That's when you're going to know who was able to pass on the price rises and who wasn't.
Yeah, absolutely. I think a lot of market leaders, you should be able to see pricing passing through. But any company that has significant labour force is going to find quite a lot of challenges.
I'll tell you what, Junbei Liu from Tribeca Investment Partners, always great to have you on the program.
Thank you.
Thanks for your time today.